Boom. And good morning officially. Welcome to the Market Watch Group weekly opening bell. My name is Scott. I'll be your host. I wonder sometimes you listen to the recording, you only hear the starting point where it's like, yeah, good morning, right? I think sometimes funny things happen in those first 5 minutes. So I wonder if people ever are like, I wish I knew what was going on. Maybe they'll want to come early just so they can participate. That's my hope. All right. Let's keep going here. Disclaimers, as always. Education illustration. We're not advisors. We're not brokers. No guidance. No recommendations. Agenda. Let's look at the opening futures and news. We'll take a look at the economic calendar and our market posture to see what's happening today. Mindset for open trades. We said there's really, if you carried something, it would likely be a fairly minimal amount through the weekend. Am I wrong? Is anybody carrying a heavy load of bullish right now? Or do you feel like you had already pared down, taken some profits, or reached exit signals? I have to imagine that it can't be heavy because technology and communication services are by far our leading sectors, and both of those are in consolidations and have been for several days, right? Like if you're in a technology trade, you've probably been giving back money for 3 or 4 days. And so the question is that a long-term trade, a position trade, a swing trade? You might be in a couple of things, but I would say overall the expectation I had was more likely that a new window would be opening. And when we look at the futures, I think that's really what we're looking at. Okay. We'll talk about this morning's opening range, what the trade implications for the day are, early week. I'm correcting these as we go. Early week opportunity list. It's all about the opportunities. And the trading plan section of the week. I think we forgot to talk. Well, no, we did, right? That we are on section 2, market posture. I put the links in for all 6 components. Those are only 15-minute videos if you ever wanted to go back in there and refresh. That will be in your emails all week long. Okay. Starting with the... where did I put this? Opening futures and news. So last night when my dog woke me up, they were negative. And then this morning they were up. And then this morning now they've turned back over on the Dow. So flat, 0.03 down. Dow, 0.2 up. NASDAQ did the same thing, but even ahead of the S&P, and it's down 0.23. Russell is 0.16 up. Oil is flat. Gold, partial, a little bullish. 0.34. Okay, flat opening for the week. Fed's favored inflation gauge takes the stage this week. What is he talking about, or what are they talking about there? Let's just pop over. When we scroll down to Friday, that's the news. Minor news until then, right? Today we have a few Fed speakers. But Austin Goolsbee is making a TV appearance. I'll be sure to highlight that on my austingoolsbeeforfed.com website. Tuesday, consumer confidence is expected to drop but stay above 100. Okay, look, we've talked about inflation. We've talked about the fact that it's very hard for inflation to go down if consumer confidence, i.e. willingness to buy, and then subsequently sales numbers stay high. Of course, consumer confidence comes down a little bit and sales come down a little bit. We can accept that if confidence has come down, but the market stays strong, but we still know that's leading to hopefully getting off the Fed train. Great. New home sales. Nobody cares about real estate right now. I mean, you might care just, for your own personal reasons, but market-wise, that just hasn't had a role. There was a little while back where people thought that it might, where they're like, oh, is this like 2008? Everyone's like, no, it's not. It's not even close. And then they're like, yeah, no, they're right. It's not. And it doesn't really get spoken of anymore. There are some interesting dynamics, obviously, with interest rates having squoze out some potential buying and creating higher rents, and at higher rents subsequently was inflationary pressures. So a little bit of a cycle there that we're trying to break. Thursday, GDP, second revision. It's just a revision. Nothing expected to happen there. Durable goods, jobless claims, they've ticked up a little bit. Last week, 238. Right? Now, is that starting to run hot? No. It's ticked up a little bit. Until it gets above 250, I'm not concerned. When it gets above 250, then I'm looking to see, does it stay there for multiple weeks, creating a 3-week average above the 260, 265 level. I mean, it's got to be in that. If that happens, we're all going to have we've never seen that yet in the last year that we've been meeting and working. When that happens, it's a different conversation. Then we start saying we may see a negative surprise in our next labor cycle, which is the first week of every month. That's when we're going to see non-farm payrolls. That's when we're going to see ADP payrolls and jobless claim or new job openings and things like that. So, okay, we're mindful. That's it, mindful. This is the big one. We've got spending. We're hoping income goes up. I wouldn't mind if spending stayed at 0.2. If we could get income to come in at 0.4 versus 0.3, spending at 0.2 versus 0.2, PCE you can see expected to go from 0.3 to 0, year over year dropping again from 2.7 to 2.6, coming down and coming down. If we get those expectations, if those are met or exceeded, and if you remember, our last CPI we exceeded. They all were exactly what were expected, and then one of the four better than expected. I think this could be an accelerant. So we want to be paying attention to what builds as we come into Friday. But it could certainly be a bit of a binomial reaction. Right? Binary reaction where it's one way or the other. It's like up or down. It's not like tepid. Okay. Speaking of the Fed, real quickly, we know there's just no likelihood. The next meeting's in 5 weeks, 5 weeks and 2 days. No expectations. Okay. Quick little, does not the unemployment have more impact on the interest rate? No, I would say the unemployment is really outside of that, other than right now, the unemployment has stayed at, essentially growth levels. So where the Fed expected contraction in the labor market, it didn't contract. It continued to expand, in fact. which is the part where they say, hey, this is where we think we'll avoid the hard landing. We still don't know for sure. Some of the impacts of Fed cuts take up to 18 months to really show up here, and so the bulk of the wave of increases that we had, there's still parts of those that we haven't seen the impact, and the Fed knows that. So that's why some people you've started to see some of the articles that I talked about where I said, I don't think it would happen this year, but at some point the Fed might cut, not because inflation has come where they wanted it to, but because they're now seeing signs that things are weakening and they can't wait any longer. There's target levels and then there's realistic levels. They say their target level is 2%, but if you go back and look at, whatever time frame, a 20-year, a 25-year, a 30-year average of inflation, you're going to get anywhere from 2.4 to 2.8, I believe. So it's never really down at 2%. That's something to recognize as well. I believe Press has moved into the September camp. Is that right, Press? That the Fed may ultimately make the decision. It's close to 2-1 and holding steady around that level. If they hit it, if they do it in September, they're going to not do it in November, and then they have one more chance. That's how they get 2. Half of the group says 2 or a little under. Half of the group or a little under says 1, and then there's a few members that say none. So that's kind of the distribution right now. If it's gonna be none, will be interesting. I don't think so. If they don't get it in September, I don't think there's any way that they cut it in November and December back to back without watching the implications first. Right? So, yeah. November definitely baked in more than anything else. There's more than 3-1 odds in favor. 2-1 in September. If not, then it's November. That's the thought process. Okay. Look at Walmart. Setting up. Just waiting for the pullback. No, let's get to the market first. We'll get to the watch lists. We have a good list of candidates, of opportunities for this week, right? Strong list across multiple sectors. Spending increases in December won't give. Yeah, I mean, the indomitable United States consumer will prevail. This is now definitely feels like the consolidation. Now, whether this thing takes all the way down to here, which would mean through the week, does it go sideways or drop a little bit until, when was our Friday announcement is, what day is that? The 28th. So that's here. Yeah, I think we could see it meander. Right now, the trend looks good. Let's real quickly visit, as we look at the market open, our posture for those who may have missed it. There was a issue. I thought I had hit send. The issue may have been me. I acknowledge that. So the email got sent late last night. I was like, oh, that didn't go out. So, but it's there. My posture stabilized is what I call it. It had been growing 5, 5, 5, 5, 5, 5, 7, 5. So we were still, and then we ease up a little bit. So to me, that feels like it's stabilizing into the mid-5 range, right? Stabilizing into the mid-5 range. It's a solid bullish score. It's not strong bullish, right? We're not in the 6s and hitting 7. And some people are like, well, wouldn't 8 or 9, if it's out of 10, wouldn't 8 or 9? Just No, it doesn't get there. I need to. So Sandy created a visual that I'm going to share. I need to create a visual with the scale of 0 being like, where I'm neutral, and -1 to +1. That's all kind of in the neutral, and then from 1 to 2 on either side, it starts to move into like that slightly bullish, and then it, and I'm thinking it's going to be like yellow in the middle, and then it starts to turn green, and then, on one side, and it starts to turn red on the other. I'm gonna play with that. I'm gonna play with that. That would be an interesting little corollary to lock in. Like down here at the bottom, I could lock it in and just like, you can just, I'm doing it. Woo! Let's both do it. We'll put it together and see what we can do. That'll be nice. That'll be nice to kind of help visualize it, right? Because it's like, hey, we don't, it's good to know it doesn't really, even though it's on a 10-point scale, I don't, there's no way it could ever get above, God, I don't know. What do you think? 7.5? I can't think of a time I've ever been above 7.5. I could go back and look through like different places where I have old logs of these and see. So, I mean, could it? Sure. We could see the greatest, strongest market you've ever seen. And it would keep venturing up into that range. Anyway, interesting to think about that. So that's a good, solid bullish score. That's the bottom line. That's what I'm talking about. Let's talk about just a little bit about the way we got there. Volume dropped. We had 2 days of increased volume on Thursday and Friday of last week, which just sort of sucked a little bit of the life out of that score. Sector rotation increased. I always love technology leading with technology's favorite hench person, communication services, standing at attention. That's always a good thing, and you can see that it's helped there. The other place that it dialed back was the VIX. Just a little bit of escalation. Speaking of, let's go take a look at that. Let's get there. It's a little bit of escalation in this. And you can see it's there today as well. Right? It's a little bit of, we're easing above this range through here. We are kind of in this little range through here, and you can see it is coming up out of it. So it was convincing right through this area here. And now we're on this. Now, I am looking at 15. I am looking at 15 as my most recent high. So we did break this consolidation. We then did get above this high here to make this high here. Yeah. And so this is all mapped itself. We've come down. We waited for this. This is the interpretation for me as I see it now. Do you agree? Do you disagree? Am I missing something? So that was the last high, which was a higher high, and that knocked our score down. This one over here was our last low, convincingly, right? Obviously, the actual low was here. But that's a higher low. However, the good news is that this range, you'll notice I drew it just a little underneath, represents a lower high potential area. So if we move into this and then we drop out of it, much the same way we waited for confirmation to go up as it comes down, that would make this a lower high. That would help to push me like with a nice gentle nudge from the VIX. Go on. It's good. And I'll be like, thank you. Nice confirmation there. That would also raise my score, and then we'd go from there. So yeah, I don't know. Like I said, it feels like we're in a bit of a weird place. I think. Would you guys agree? Feels like we're in a bit of a weird place because we are in a bullish score, 5.5 for me. I mean, the VIX is low. It's at 13.76, but it is escalating in terms of the pattern that it's gone through. So could it all of a sudden just like spike? Sure. But I feel like we're in a good place. The fact that we have this potential lower high window confirms that we are on the right track, in my opinion, with a potential bullish window setting up this week, right? That's kind of the I think consensus. Yes, I don't want to say it's consensus if some of you are like, no, I don't feel that way at all. Don't speak for me, Scott. All right, let's get to the watch list. Yeah, this looks about what I thought. If I get that lower high, any hedges that I have on will at that point be closed down. There's no reason for a hedge after a lower high. That's a de-escalation signal. And I'll have to then say, hey, how did I do with that hedge? Okay. Let's erase this. Let's move this out of the way. And let's go take a look at the SPY one more time. Real quick look at our opening range, SPY. What are the buyers doing? What are the sellers doing? What does this all mean to us? So we opened a little doji, then we moved around a little, then we moved around a little. So this is our third candle, and so far, that's our opening range. It's pretty tight. If we break the opening range to the upside, I think we could definitely get above this and find ourselves in this territory. And that's like, whoa, wait a second. Is that a go signal? I'm skeptical that that's what we see, but open. If we break to the downside, well, now we have to open our chart just a little bit and see where. If we break to the downside, we got to hope that we hold on to 543. Because if we don't hold on to 543, then we're going to ease into this prior area, and then that does make us think that we're likely to test more towards the bottom of this trend line, right? More towards the end of the week when we might get some news that helps to become a catalyst for a bounce. Okay, let's get to the watch list. Is there anything I didn't talk about that I should have, in your opinions? Let me know. What is starting to happen? This. Right? This looks pretty strong here. The AI bump that is accelerating Apple. We already were re-emerged bulls on Apple. Made a new high, pulling back, easing into possibly the next setup. Yeah, looking for it. Definitely looking for it. That's on our list. AMD, just watching it. Amazon. I like Amazon, and it technically gave a signal. I didn't end up pulling the trigger on this one. Did anyone pull the trigger on Amazon? You can see it's kind of bumping its head at this old resistance level. Let's see. Let's see what happens. ABGO, another split candidate. Another one sliding in. Let's see. Yeah, that's another one. Keeping a close eye on that for a setup. AXP. Oh, look at the financials. Poking up a little bit today. Boeing. Oh, I talked about Boeing. I think Boeing, if you like industrials and you're willing to overlook many of Boeing's misgivings, well, then that's a potential. BAC. Look at Bank of America coming back. If you held on to a piece of that, well done. I did not. I shut mine down. I didn't like the way it looked, so we'll see what happens. Citi, not looking so great still. Caterpillar, not looking so great still. Colgate-Palmolive looks amazing, but it looks overextended. We can't trade that. Chipotle. Oh, Chipotle is easing in to a buy signal as the split occurs. It's going to be so interesting. We're definitely going to watch this. We've been talking about it. And all of a sudden, here it is, the 50-1 coming up. Just a couple of days. And we'll see if the theory holds as to what might happen with this. COP. COP. Oil looks fine. I mean, it's come up a little bit. Overall, no. Costco. Oh, yeah. Now we got what we wanted at this point, right? Some of these we're like, oh, it's about to start. Then it wouldn't. Every time it was about to consolidate, it just wouldn't. And now it actually has 3 days. We're good. When this thing stabilizes and turns around and gives us our next signal, at or above that 50, we should have a great opportunity. Costco is a beautiful beast of a stock. I love Costco. Look at this long term. Look at that strength. Very, very strong. Right? DAL. Iffy. But still bullish. Sitting at the 50. The Dow. EQH. So, financials got just like a little teeny push again. Not much, though, really, when you think about it. FCX. Materials and energy, to me, still look like they're, not doing much. Oh, what did I tell you about? So I made a prediction about Bitcoin. I said if it doesn't get above this, but then it breaks below this, well, we're going to be here next. And if it can't start to find its footing soon, I want you to notice that there is not a lot of price action through this range, right? Well, that's like 15,000 a coin. Let me see if this will hold, and I change my symbol to the futures. Oh, it sure did. Super interesting how that played out. Yeah, you're talking about a 60,000 to 45,000. There's just not much. Maybe one little shelf in there. I don't want to make it seem like there's nothing. Yeah, you got one little shelf through here. Right around what, like 50, something like that. I don't know. All these Bitcoin hodlers. Be careful out there. What's next? GE. Okay. If GE gives me a little flag and bounces off of the 50, there's that third trade I was talking about. Gold, nothing there. Google's on our list for an alert. Let me go into the Heiken Ashi. Yeah, if nothing else, I'm going to tighten I'm thinking if nothing else, I should hopefully get one of these is what I'm hoping for. But I'm going to tighten my stop. I'm going to manage it like a swing trade. I'm going to see if I can't get up to 185 and lock a little profit in. That's what we're looking for here. Okay. HIMS. Nice, strong, coming into favor retail, consumer stock. There's another one that looks like Apple, that looks like CMG, that looks like Costco. But look where we are. We've got Costco and Hims. Those are consumer stocks. We've got Apple. That's technology. ABGO, communication services. CMG, consumer. What else? I don't love airlines and home builders. To me, are just kind of funky right now, where they look very similar, right? Here's Delta, and here's KBH. And you can see they just kind of have like this same sort of sideways pattern. Coca-Cola. That was the other one I was looking at. Did anyone take that one? I didn't put it out as an alert, but I did get into the trade. Did anyone take Coca-Cola on this bounce? Meta. Oh, look at Meta today. Meta wants to lead the charge. If Meta looks like this at the end of the day, I would say that's a viable consideration right there. Yeah, Google's. Let's see. Google and Meta teaming up. Let's see what we think about Meta. Take a quick peek at another signal. Yeah, I like that signal if it holds. Looks good. MFC. There's a little bit of financial resilience, which I like to see, even though I got out of the trade from a group standpoint. That's helpful. MMM, okay. Morgan Stanley. Oh, maybe a little bounce coming out of here, possibly. Microsoft looks overextended. Micron, I would add it to the list if it wasn't reporting earnings in 2 days. We'll see what happens with that, right? Netflix is pulling back. Netflix was at resistance. Great. Wait for a few days. This one's going to be right there with the rest of them. NVIDIA, add it to the list. Look at it sliding into that trend line. Great. PLTR, add it to the list. Like I said, we have a good list across a lot of different areas. RTX was already a trade from last week. If you were going to take it, it was going to be here, maybe here. SPY. Oh, the market's trying to turn around. Ooh. And look at that, trying to break the range. Can it hang on to this momentum? There we go. That might help turn some things. If we see this market, there's a communication services is what started leading our sector rotation reversal. So could Google and Meta carry a load for a bit? I think so. I definitely think so. TSM, put it on the list. That's looking good as well. We talked about the dollar. We're like, hey, this thing needs to get back below 29 pretty immediately, and we'd really like to see it back below 28.75, which puts it back near this 50. Okay, pretty immediately is, at least as of right now, today. We're back below that. We're not out of the woods, and for me, until we get back below this kind of area up here, this upper area. So we'll keep an eye on that. VIX. Okay. It would be hard to get. I mean, this would have to come all the way down and envelop this, which by the time we got that, we're going to lose a good chunk of opportunity. We'll see what today brings, right? We'll come to the cocktail hour tonight. Let's have a chat and we'll discuss, even though it's, more social. Of course, we still talk about trading. Who doesn't want to talk about trading? Walmart. Walmart was back here. This was the trade. This is one I'm still carrying, but I definitely want Costco. real quick through the sectors. Materials, flat. Communication services, strong, looking to bounce. Energy, still down, which continues to alleviate inflationary pressures. Financials, maybe trying to stabilize. Same thing with industrials. Those are the other two of our four that we really look for. Technology looks strong, but in consolidation. So the question is, can these other three sectors get going as technology is consolidating, right? Staples, here's utilities. Utilities pulled back some. Here is healthcare. I'm not really watching a lot, but there's a couple of decent pharmaceutical trades I've seen, if you're into that. Okay. Meta looks sideways. Let's go back. Meta. So here's what I see. Remember that once we had earnings, we waited and said, okay, what has to happen? Well, it popped up, consolidated for a while. And we said, out of this consolidation, what has to happen? We have to have a breakout. And you can see we had volume. You'd see it better if I zoomed in because this is making it, looks like it's flipping us off, to be fair. But that's where we had the breakout right there. And I said, okay, then what? We got up here to a higher high. Now, if I extend this line, I would like to see it hold above that line, as well as above the 50. Boom, boom, boom. We moved into the selling cycle here, right? This is where the sellers got their cycle, right through here. Buyers did their job, right? So the buyers, they did their thing right here. You can see that was the biggest other than this one. Look at the buyers. Buyers there, buyers there. Now, then we had the consolidation. That's the sellers. So here in the sellers, what do we ask? How far down did the sellers push it? So sideways in a selling cycle press, for me, means a lack of sellers in the selling cycle, which means the sellers are weak. Yeah? There's no sellers. They're not pushing it down. The buyers stopped. The buyers are like, all right, we're going to open the door. We'll see if you guys want to come in. Try to come in. It's like a dare. They dared them. So how far did it drop? From 513 to 495. So what is that? 3%? Minor. Now it stabilizes through here 3 days in a row. Like Sandy said, finding support. Now the stochastics is turning down again. Like I said, it has to hold this way. If at the end of the day, this thing's at the back down inside at this level, then that signal probably is off. It's not a signal 30 minutes in for me. But if this candle holds, that to me is saying that's the turn. Boom. Yeah, that's my go sign. Okay. Real quickly, I have to run. What are we working on this week? We are working on Section 2, market forecasting. So if anyone's new, this is a great opportunity. In your emails, I'll send the email out here within a couple of hours. If you go look at the email that came late from yesterday, it's there. But you'll see that there are videos for each one of these components. Let's work on market posture. Let's make sure you're feeling good. And then we'll go from there. All right, tonight, right? 8:30 p.m. Eastern. Please join me for the cocktail hour. It'd be great to see everybody on camera, have a drink, talk, chat, wax philosophically about all things beautiful. Thanks, guys. Have a wonderful rest of your day. As always, Happy trading.